we'll start to see a rush, and that rush is likely going to be something that we haven't ever seen before. It is going to trigger that rampage of capital into Bitcoin, and that's when you see omega candles, and that's when you see even more volatility. We could go up 300,000 and then down 200,000 in a couple days. I think you'll see it before, and that is really how we get to a million. When we get to 200 or 0.2 M, I think you'll see another massive jump, because the world at $200,000 per Bitcoin is a very different world than 109 or 84,000 or whatever we're at right now.
Samson Mow, the architect of Bitcoin nation-state adoption and CEO of Jan3, pulls no punches in his assessment of where Bitcoin stands today. He starts with a stark warning. The average person must realize they're no longer just competing with other investors. The game has changed. You're now fighting for Bitcoin against Michael Saylor, against governments creating sovereign Bitcoin reserves, against countries issuing Bitcoin bonds, and against entire nations actively mining and acquiring Bitcoin. And this isn't a slow burn anymore. It's an arms race for the hardest money ever created.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
The average pleb needs to know that you're up against everybody now. You're up against Saylor, you're up against the US trying to create their SBR. You're up against Bitcoin bonds, you're up against Bit bonds, you're up against, pretty much everybody. And you're fighting for sats against nation states, because they're already buying and mining it. And now it's just going to accelerate, and it's going to drive up demand massively. So that's the thing you have to know. That's the biggest takeaway. You have to stack like there's no tomorrow, as more countries look towards Bitcoin as the solution to their problems, which it is, and the kind of normalization of Bitcoin strategies, especially from the US. Like, if even before the SBR, you could look to the ETFs and say the largest asset manager on the planet has launched a Bitcoin ETF. Why wouldn't a poor country allocate some of their capital, some of their reserves to Bitcoin in some way, just as a prudent asset management strategy, which, in theory, every central bank of every country should be doing if that is their mandate, to stabilize prices and ensure economic stability. But that is not enough, actually. But the SBR, I think, is very different, because it is direct government acquisition. And I think once that really kicks into high gear, the executive order now just says don't sell and acquire in budget neutral strategies. But when they do actually have legislation that says go and buy, or if Howard Lutnick puts together one of those budget neutral strategies and starts executing acquisition, then I think we'll start to see a rush. And that rush is likely going to be something that we haven't ever seen before. It is going to trigger that rampage of capital into Bitcoin, and that's when you see omega candles, and that's when you see even more volatility. We could go up 300,000 and then down 200,000 in a couple days. I think you'll see it before, and that is really how we get to a million. A lot of people think, it's going to go up slowly, it's going to be boring, and there are stretches of boring price movements in Bitcoin's history, but then you have really intense, fiery upheavals where it just goes up like 17x in a year. And the way I see it playing out is when we hit different price levels, like right now where we've topped at 109-ish, and when we go to 200, that could be a bit of a slog. We'll see. TBD, because everything has changed so much with all of this stuff happening in the US. But when we get to 200 or 0.2 M, I think you'll see another massive jump, because the world at $200,000 per Bitcoin is a very different world than 109 or 84,000 or whatever we're at right now, you're getting to a substantial amount of gold's market cap. And I think at that point, you're either the second or thirdest largest asset on the planet. And I believe that changes perception. So Bitcoin at 200,000 is going to look very different. And then it's not like, it's hard for it to go up by another 100,000. So you go up to 300, right? Mm-hmm. And you see, a couple more Omega candles getting us to 500. And at that point, we've reached, half of gold's market cap. And at that point, I think you start to demonetize gold, because people with allocation to gold will see that, Bitcoin just went from 0 to 500,000 in maybe 17 years, maybe 18 years. We'll see. But that is a really crazy realization that will dawn on them. And then you start to demonetize gold, and then you just double again to get to 1 million. So that's kind of the path I'm seeing, that things change as Bitcoin levels up. It's like Dragon Ball Z, right? It's like, it's not like Goku gradually gets to SSJ 3, right? It's like SSJ, boom, SSJ 2, and then 3. It's just step changes in power level. And it's the same for Bitcoin. When you get to 200, it's different. 300 is different. 500 is different. And then 1 million is different too. So that's how I foresee these changes coming. And, if Bitcoin is able to get to 200 or 250, which people often predict, why wouldn't it just go up another 100, 150 and go to 500, right? Like the prediction from Josh Mandel is we'll hit 444,000 this year, right? Mm-hmm. If you hit 444,000, what's to stop it from just going again to 1 million? In my view, there's nothing stopping it at that point. I think it's either at the 500,000 mark or 1 million mark. Somewhere in that range is when people stop wanting fiat. Mm-hmm. So there's a lot of models out there. Saylor has his Bitcoin 24 model, and then there's Power Law, and there's all these other models. None of them actually choose a break point. But you're right, there is a breaking point. It's not going to coexist forever. It just, I think that's a pipe dream. We'll always have this exchange rate, and we'll be trading Bitcoin for $100 million, and we'll make new fiat with more zeros on it. I don't think so, because Bitcoin is a far superior technology. It's like 100x, if not 1,000x, on anything we've ever had in the past. Right? Being able to transport value for a few dollars instantly across the planet with finality. That is a big game changer. And most people don't understand that. Most people don't even know what finality is, right? Like, they don't understand that when you pay with your credit card, that's not final yet. It's finalized weeks, maybe months later. But it's almost like all of this stuff about how money works is a lost art. And again, that goes back to what we talked about earlier. Why do people find it not interesting? Because they're just so far removed from all of these things that it's like a different universe. They just want to get paid, have a number in their bank account, spend that on all these services, and go and watch Netflix.
Mow believes this was the great delusion of our time. Historians, he argues, will one day look back at the pre-Bitcoin era as the monetary dark ages, an age where the global economy was based on a collective hallucination that paper had intrinsic value. Bitcoin will be seen as the moment we woke up. The key insight here is that Bitcoin's superiority isn't just about scarcity. It's about finality, decentralization, portability, and trustlessness. It's the first truly global money with absolute rules and zero reliance on human governance.
Eventually, people will demand to be paid in Bitcoin because their suppliers, like the grocery store or department store, whatever, will want Bitcoin too. So it's just like an amplification of demand from all parts of society that want Bitcoin. So eventually, you working for a company will have to ask the company, like, pay me in Bitcoin, because I can't buy groceries with this paper anymore. But hyperbitcoinization depends on how you define it, but I define it as the point at which you no longer need to convert Bitcoin to fiat anymore. You can just live on a Bitcoin standard and earn sats and spend sats. But I believe it's coming faster than most people would expect. because these types of changes in money, in the base money that everyone uses, are very quick changes. It's not a slow, gradual progression where, in 2 years maybe we'll be at 20%, and then another 2 years we'll be at 40%. It's quite exponential, because when most people stop wanting the fiat, then everyone stops wanting the fiat, because it's like a race against time to get rid of the fiat and get into something harder, which is Bitcoin. But I think it's probably bigger than something like Bretton Woods. I would say we'll look back at the period up till 1971 as the monetary dark ages, this period of time in which nothing really made sense. Because if you think about it, when we went off the gold standard, all of a sudden, this paper that was designed to represent gold, it's a IOU for gold, suddenly was disconnected. And you could now take this paper, and whoever can print the paper can make more of it to buy back that asset that was supposed to be represented by that paper. So it's like bizarro world. Nothing really makes sense anymore, because you have a relatively finite hard asset in gold, and you have, a representation of that asset in terms of paper or digital paper, whatever you want to call that. And now this can buy all of this. So, if you really think about it and you sleep on it and you mull it over, it's like wacko that suddenly this valuable thing can be bought by this worthless thing. And this is sort of the conclusion of that experiment. And I think we'll look back, and in 50 or 60 years, historians will look back and say, wow, I can't believe we were so primitive that we were led to believe that, this piece of paper had value. And that's sort of the realization that they'll look at it. Not, it's like Bretton Woods type, we agreed to do something, but it's just, we were all insane for decades using paper.
They still live in a world where credit card payments aren't settled for weeks, and where the average person doesn't even understand what finality means. Mow argues that we've grown so complacent, so comfortable in our Netflix and direct deposit bubbles, that we've forgotten how money even works. But change is coming, fast, and it'll touch every corner of society. From individual wage earners demanding to be paid in Bitcoin, to multinational corporations restructuring their balance sheets, to central banks rewriting their reserve strategies, it all leads to one thing. Please like and subscribe.